This is good. This is going to be
How you doing, Rick?
good. How about you?
I'm doing just fine, thank you.
Good.
Today is your day. You came up
Yeah,
with the topics for the day, and
that's a good
so
one.
I say you lead the show. Go
Yeah,
ahead, Rick.
cool. Thanks. No, thanks, Megan. We're going to talk about the four things that home buyers should do right when they buy their house. These things are really overlooked a lot. And so after closing, that's where the risk really starts when they buy a house. So first thing you want to do is set up a term life insurance policy. That's first and foremost because if something were to happen, you want to be sure that you're covered to pay off the mortgage. Now, there's two things that can happen here. Oftentimes when someone buys a house, they get people calling them for insurance policies, but that's a different policy. They will typically call them for a mortgage protection policy. Got to be careful there because a mortgage protection policy is tied to the house. It's not a separate term life insurance policy. So when you do that, those policies are a lot more expensive and they can be more problematic. So
That's
what
what
you
I'm
want to
just
do,
reading about right now. I'm like, what's the difference between a term life insurance policy and the other one? Yes, okay.
okay, so the difference is, good question, Megan. So the difference is the other policy is tied to your house is about four times more expensive than a term policy. It's a lot more expensive. And only covers the exact amount of the mortgage. So it's not a really good value in terms of what you're getting for your money. If a home buyer takes out what we call a term policy, then they actually can get more coverage than the actual house. So let's say, for example, somebody had let's say $700,000 mortgage. They could take out $1 million life insurance policy, or they could take out 700,000 or whatever they wanted. They're not really limited to that. If you take out a policy that's attached to the house, the limitation is the actual value of the mortgage itself. And that policy, like I say, is going to be about four times more expensive than a standard term policy. So that's really, really important to know. And so that's the first thing that people should do. The second thing they should do, because that doesn't cover them for everything, the second thing they should do is take out an umbrella insurance policy on their home. That sits on top of your homeowner's insurance policy. So what that does is it covers you from lawsuits, major claims that exceed your actual base policy. People don't know if they have a claim and they get sued. Let's say, for example, it's a car insurance claim or some sort of injury claim on at their house, or if they get sued for something else, your insurance policy may not cover that. So an umbrella policy would cover claims over and above what your house coverage is, if that makes sense.
Mm-hmm.
So, for example, if you got into a lawsuit and somebody was suing you for say $1 million and your homeowner's policy is for say 600,000, you're potentially liable for that balance difference. The
Mm-hmm.
insurance company may not pay that. So you definitely want to get an umbrella policy. Um, and so that's the second thing you want to do. But that also, there's a third layer to this, Megan, that people want to be aware of. First, set up the term life insurance policy, set up the umbrella policy. Number three, set up a trust. Do a trust because that's going to put everything into the trust to protect you. Okay?
Mm-hmm.
It helps avoid probate. We know that already. We've talked about that in previous talks. But it also protects their privacy, and it gives the buyer control over the transfer of their home if they were to die, for example. So the trust gives them control over the entire transaction itself after closing. And then the fourth thing, which people really forget, is you want to update your beneficiaries. That's a common mistake that buyers make. So you have the insurance policy in place, you've got the trust in place, you've got the umbrella policy in place. But if something happens, you want to be sure that you've got your beneficiaries lined up or identified in all those documents so that the transfer happens efficiently. So those are really the four things you want to do: term life insurance, umbrella policy, a trust, and then make sure your beneficiary is all in place.
That's some very, very solid advice because, you just don't know how messy a situation it will be if, God forbid, something happens to you.
Yeah, boy, that's for sure. And you and I have experienced situations with clients where something has happened and maybe they weren't covered and they were really struggling to see what their options were. And sometimes they don't have these things in place. Look, we always like to think that something won't happen to us until it does. That's
Yeah.
just for life, and that's unfortunate. But we want to be sure that our clients are all protected every way they can be protected, so that in the event of a life event, they know what their options are and they know where they're protected. It's so
Mm-hmm.
important.
Mm-hmm. Perfect. Well, I don't really have much to add there except for sounds like a really great plan. And
Yeah,
make sure you
thanks.
work
It's
with an amazing trust attorney that helps
yep,
to explain to you, because it's, once you create a trust, you have to put your house in the trust, and then you have to have a trust
right.
bank account, and you have to have it all set up so that when something does happen, that it's a seamless transition to the trustee that's
100%.
surviving. Yeah.
Yeah, it's all good advice. I know it's human nature. You get a house and then you're excited about the house, but we just got to always be prepared.
Yeah. Uh-oh. Phone cut out for 1 minute. Can you hear me?
Again, lost you there for a second.
Oh, there you go. Perfect. All right, Rick. Well, I think that's it. Anything new for the week? How are interest rates doing with all
Well,
this
rates are,
mayhem
uh,
market?
well, I got to tell you, we're back to volatility again. We've had a lot of volatility in the market. We've had some days where rates are moving up and down throughout the day. So there's a lot of volatility right now. And look, I think it's all really related to what's going on in Iran and the war and the oil. And when you look at the oil situation, for example, we all know, we see it at the pumps how much gas is increasing price, but that's only part of the story. We have to really know that what happens behind the scenes is when price of gas goes up, what else happens? Well, the cost to deliver your goods and services to stores also goes up. Everything goes up related to the price of gas. So when you have that situation, Megan, what's happening is you're creating an inflationary pressure on the economy. And when you have that inflation pressure on the economy, the tendency is to move the rates up a little bit to slow it down. Now, in this case, I think it's just very temporary. I think once the situation in Iran is resolved and we got the Strait of Hormuz open and oil is flowing smoothly, I think we're going to see some changes pretty quick on that. But otherwise, I think the market's in pretty good shape in terms of the economy. And again, I think this situation with the war and the movement in the rates right now was really just temporary.
Yeah. Yeah. Good. Well, we should hope so, because it's spring. It's time to get moving here.
Yeah, oh, for sure.
Yeah.
No doubt.
All right, Rick. Well, I appreciate you. It's great
Thank you, Megan.
information.
Appreciate
We
you.
like to keep everybody educated so that
Hmm.
they have the best experience that they can possibly have. And if they ever have any questions, you can reach out.
Awesome. Thanks, Megan. I appreciate you.